This is super simple what I'm going to show you today about trading market ranges. This is more of a longer term approach. You can use it on short term, like you can use it on 1 hour charts, 4 hour charts. But what I like to use the most is focusing on weekly, monthly, and daily charts. So I'm looking ahead. What's really cool is once the market's closed over the weekend, I can open my charts up over the weekend, maybe on Saturday or Sunday morning, and really put together a trading plan of all the trades I would take in advance. If the market would move to this area, I would be taking a sell, and if the market would move to this area on the same pair, I could take a buy. And so I will have a buy and a sell trade potentially on the same trade pending. I might have 24 to 26 trades in a week just sitting there pending, and a lot of them never hit. All right, so but what we do have is when you have market spikes from crazy news announcements or things like this, those tops and bottoms of those ranges will get hit, and as the market settles down, you guys know how the market works, everybody freaks out, the market jumps, and then when it settles back, you can walk away with a couple hundred pips. We just nailed one the other day on Euro New Zealand dollar. I think the numbers, it shot up to 16800 and dropped a couple hundred pips, and then took a nice little trade on that in one day. So we just basically set those trades in advance and wait for the market to move to us, right? We don't chase the market. So let's get into this a little bit. We don't need all that stuff. All right, so we're going to talk about, this is one little strategy, if you guys have watched any of my training videos on YouTube or anything, that you'll notice I talk about all the time, and this is the crux of the whole thing, is that the FX market trades in a range 80% of the time. When I mean a range, you can also think of a channel, okay? So I'm going to show you here in a second. We're going to talk about how to find ranges, where I would take entries and where I would place stops. I usually use this on weekly, daily, and monthly charts. It also works on 4-hour and hourly charts. But I prefer the longer term stuff because personally I would rather trade much simpler, where I'm looking way in advance into the market over an entire week period. I can set my trades in advance, and at that point I'm pretty much just managing my trades. All right, so I think we're going to get into some live charts. Let's do a little bit of digging here, and then guys, we'll do a Q&A at the end. I'll add any questions you guys want to know about Forex or anything. We'll just dig into this information. So right now I am looking at the Euro USD. So one thing we want to notice here, one thing we want to talk about here is when you're talking about trading in ranges or finding these channels, okay? So there's 3 types of channels, right? You can have, just like there's 3 types of trends. You can have a channel that's going up, a channel that's going down, or a channel that's going sideways. Personally, I like sideways channels. And a lot of times when people talk about the market going sideways, they can't trade the markets very well. They have a very difficult time. When the market goes sideways for us, especially for my Trading Advisor Pro customers, that we have a signal service. We send trade alerts out twice a day. We really rake in the pips when the market goes sideways. All right, so we actually hope for a sideways running market. But let's just open up the Euro USD. I'm going to kind of run through these, and we'll talk about what we're looking for in the range. And I'm not going to get deep into support and resistance, folks, but I think you guys know a lot about that. But what I'm looking for is how, when the market continues to hit the specific support and resistance levels and bouncing. So right here, like on the Euro USD, this isn't a huge channel. In fact, if I zoom this in, we'll talk about what I'm doing here. It's not a long channel. In fact, this thing's really only been running since, let's see here, since end of April. So we're talking about a couple months. But you can see here that at the bottom of this channel, price is sitting here about the 108.60 range, a little bit below that, 10800, 108.20 to 108.60, okay? And it seems to peak out around the 114 mark. So here's an opportunity, especially when you're sitting here and you've seen the market move a few times and you see that it tends to bounce, you've seen these wicks, the price is having a hard time hitting here, that you can find great opportunities for potential trade setups. So usually if this was a Saturday, maybe a Sunday morning, I would look in advance and I would instantly be saying, okay, I am going to be looking for a sell opportunity up here, the 11400, and a buy opportunity here around 108.60, maybe even a little bit lower, all right? And oftentimes what I will do is set those trades at the same time. So I'll have a buy trade and a sell trade. Now I usually use a good size stop. I want to make sure that my stop is placed at least below here. All right. Well, let me draw a different line. I don't like that line. You want to be below that recent swing low, below that recent swing low, which is about the same. But one thing you need to know about the euro and the pound, is, well, any currency trade, is talking about the rounded figure. So 1.0800 is automatically going to be a psychological bounce point. So what I would probably end up doing is setting a trade, my stop, just a little bit below that, all right? Knowing that we're probably going to have to break this current support level and the psychological 10800. So I'm trying to put as much protection in there as possible. So I may end up having a 60 to 80 pip stop. Some of these currency pairs, like Euro New Zealand dollar, Pound New Zealand, which I love to trade those trade pairs, I might put a 120 pip stop because I'm looking for 400 to 600 pip run on that trade. Okay, so for instance, currently my TradeAdvisor Pro Signals direct customers, we took a trade when market came down and hit this right above the 10800 mark. And now you can see that price is already pushing itself back up. So once this pair gets up about 100, 120 pips here next day or so-ish, we will instantly start closing out profits. Like I may close 50% of my trade, move my stop to break even, right? And then what happened? We instantly locked all of the profits into the trade and removed all risk. That's one of the biggest keys to trading in general, is finding the highest probability trades. There are no guaranteed trades, but we want to make sure we find the highest probabilities. Make sure we have a stop, because you got to give room for the market to breathe. If price was getting at this level, then a huge news announcement came out on euro, it could break through and then slide its way back up. You usually see those on news days. These kinds of things like that, you see these spikes and then boom, back down 200 pips very, very quickly in one day. You've got to give the market room enough to breathe, so you don't have a 30 pip stop on trading off a daily chart, because that's just not enough room to give yourself some breathing room. So I like 60 to 100 pips, usually on euro and pound. And then once that trade starts getting up, we just work its way up. But at the same time, you know, I'm looking at selling right around here, right? So I have a sell position right at the 104 mark. This buy position, I have it set to close the final position out in profit at usually 20 pips before here. So run right around the 133.80, because the pound and the euro-based trade, euro USD and pound dollar, tend to love the rounded numbers, the 1.1400, and also the 80 mark. Okay, so 113.80, you see a lot of bounces off the 80, especially if you break down to low, really tight time frames, 5-minute, 15-minute charts. You'll see that euro and pound tend to bounce a lot off of the 80 and the 20 marks. So I'll usually have that trade set to close out and profit there, the final amount of my position, and I'll automatically have a sell set up here. Now the sell is again a 60 to 80 pip stop. I want to make sure I'm above those recent swing highs, but my closeout position or final closeout would have been right above here. So let's talk about, you wake up on a Saturday and you want to set up a bunch of trades in advance, and you've got on your charts, kind of like I do, you know, I've got all these currency pairs set up like this. You can see down here at the bottom, and I can scroll across. I've got even more. And I've got 20-something pairs, I do believe, sitting in there that I look at. And the goal is you want to kind of pre-plan in advance where, if the market moved to this position, I'd be taking a buy. If the market went to this position, I'd be taking a sell. So you can kind of set the trades in advance, okay? And then what I go do, I set those trades up in advance. And let's talk about, like a lot of times, here's what I really like the most. What I really like the most, if it was a weekend, the market's already closed up, and the market is sitting here right in the middle. Let's open that chart back up. Let's say it's sitting right in here. Right in here. Now this is an awesome opportunity. So we're talking about, you know, the 111 to 112 mark. Because here's what happens. Sunday evening in the U.S., the Asian market opens. Usually you don't get a lot of movement, but through the middle of the night, when the European market begins to open up, a lot of times you don't see a lot of activity. A lot of times the market can explode. So many times I'm sitting here Sunday, the market just opened, it's not doing much activity. I wake up in the morning and some type of news spike or some market sentiment, a news announcement that came out of the Eurozone caused this pair to explode up, just like you see right here on this day, a couple hundred pips. Boom! Usually that momentum cannot last, so it hits that resistance point, and as the market sentiment relaxes, which is what it's all based on, right? People freak out, they hit your spot, and then the market settles right back down. And what happens is you then have positioned yourself for the market to settle back down. And by the time you open up your trading platform, when you wake up in the morning, you're up 200 pips on a trade, and you just start closing out positions, boom, boom, boom in a row. I've done it lots of times where I've closed out 600, 700, 800 pips worth of trades in one shot on Monday morning. You wake out of bed, open up my laptop, crank it open, and before I even got a chance to really open up my charts, I'm up. And the saying goes that a bird in the hand is worth two in the bush. I do believe that when you're sitting here and the market moved explosively and your trades are up, they can also reverse explosively, so you take your profits as fast as possible. All right? So again, usually when I'm setting up these ranges, the market is already sitting in the middle of the range, and I'm looking for I put a sell in advance and the buy in advance. So we'll go into some more charts, but I want to make sure you understand this strategy a little bit more. So let's just say I've got this set to where I'm going to buy this thing. Oops, let's move that down. I'm going to sell it, I'm going to sell this at 11400. And sometimes I like to do 114.05 or something like that, because usually it won't hit 11400. It'll bounce through. If that is a really strong resistance level, a lot of times it'll bounce through 5, 10, 12 pips. And so I'm getting an extra squeeze out as it breaks down back through 11400. So we got 11400, so we're going to sell there. And let's go ahead and color this green. And then I would usually put a stop on this above these two swings, okay, just a little bit above, and right around there, 114.77. So we're going to turn that one red. And at the same time, I have my take profit level on this trade set. Let's say we're going to take this trade right down at the 108.60. I would have that take profit level sitting really right at the 10900 mark. Okay, all right, and we're going to name that one blue and move that just a tad bit. All right, so now I've got one sell position already set up, and these are just the colors so you can see what we're doing. But I would be taking a sell position here if the market was, say, it was right here and the market was going to move up. I have a stop up here to protect our loss, protect us from loss, right? And I know in advance, by the way, how many lots I'm going to take. I have a lot calculation sheet that I do on a weekly basis based on my account balance. So if I've got $200,000 in an account and I want to risk 1% of my account balance on one trade, I automatically have lots calculated anywhere from 30 to 150 pips. Because you don't use the same amount of lots, right? You're going to basically change your lots. Because I want to know that if price hits here and hits my stop, I lost 1%. That's all I'm going to lose. If my stop is all the way up here, maybe it's a 200 pip stop, which I never use, but let's just use it as an example, then I'm going to also make sure I don't lose more than 1%. So if that's going to be the case, what do I have to do? I have to change the number of lots that I use. Okay, so at the same time, if I have a 30 pip stop, I can spread that 1% risk along 30 pips. So I'm going to use a much higher number of lots. Does that make sense? So we got a sell position sitting here. And at the same time, I'm going to have a buy position set up. And let's just say I'm going to buy this thing at 108.50. I'm just going to throw out a number, right? Because it keeps hitting here a lot, boom, boom, boom. And so I'm going to put in a buy position here. To buy here, and I'm going to have a sell position below those swings, and because those swing lows are so close to the 10800, you see it came really close to 10800 both times. okay, and then continue its way up, I want to make sure I go past that one as well, because that's two support levels that could protect me from getting hit. If it breaks through, if this one doesn't hold, this one should, okay? And I'm trying to protect this trade as much as possible. So we're going to change that one red. And we got basically a 70 pip stop, so I'm going to calculate my lots based on 70 pips, 1% risk. I used to trade 2% risk. Right now I just focus on 1%. And now my take profit level, I'm going to make sure my take profit level is before this sell position, right? Because especially if you're in the US, you've got NFA guidelines that you can't take a long position and a short position at the same time. There are ways around that, but you want to make sure that your system can run automatically and it didn't miss your trade because you didn't set your take profit levels at the right time. So usually I'll set this trade up 20 pips before that level. All right, so here's what it looks like. If this sell hits, and in the meantime it starts growing down, we start closing out positions, and we're always moving our stop down, 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 right? Because worst case scenario, it shoots back up, we get stopped out in profit for more profit, right? We want to lock the profits in a new trade. But this thing should close out, if we let it run on its own, it should close out in advance before, boom, the next buy position hits. And there's been times, in fact, I'll show you on the New Zealand dollar back in 2012, that for a period of about 5 weeks, the New Zealand dollar went sideways, and we nailed over 2,200 pips for that entire month. And a lot of it came from the New Zealand dollar. I do believe more than half of it came from the New Zealand dollar because it went sideways. And we literally kept buying the bottom, selling the tops over and over, almost a daily basis. It kept hitting the tops and bottoms of these ranges. So that's really it, folks. I'll get into more charts here, but the simplicity of being able to set your trades in advance by doing something like that. All right. So let's look at, let's see if we got anything else. Okay, let's talk about, no, this is not the greatest example, but this is a decent example, not the greatest one. But on the Euro USD monthly, now at this point we can draw a trend line. In fact, let's not use this one. Let's use the Euro Pound. Actually works better for this. Euro Pound is a really great pair to trade when the market goes range bound. Very good pair to trade. All right, so I want to show you here on the daily chart, and I want to go over and look at this monthly because I can see something on there. So this pair is a pretty predictable pair to trade, and you can see here that I got a lot of lines. It's a bit messy. That's because I still have trend lines drawn out from way back. I need to clean up this chart. But you can see that this pair tends to trend really smooth, and it's very easy to find opportunities. If I was to, for instance, draw, that's not working, draw a trend line. Let's try to grab my other line. Down through here. And I need to remove this other one because it's making it hard to see. Okay, let's just go back and show you that one. This one will be easier. I'm going to go back in history. And then I'll come up to the most current one that we're working on now. In fact, we just closed a position on that a couple days ago that did really well. But you can see this pair starts good in nature. So look, I'm going to go back a little bit and show you what we got. So starting here, you can see that you've got like a mini range going on here. It broke through that support level, and then it went to another range. And then it broke back up and went back into the existing range, right? So what happens in your position where you had a sell position here and a position hits and blows through, right? You get stopped out. It is what it is. And now you still have your sell position waiting to hit. So once that trade broke back up, I waited for the sell position, okay? Sell position hit, and I already had had set up another buy position. And once that sell position hits, I've been taking out profits, closed the rest of it there, took another buy, worked its way up. At this point, I got stopped out, the remainder, right? But I had already taken out a huge chunk of profit, moved my stop up, got stopped out. But by the time the trade was already moving, and I had moved my stop above the break-even level, I already had another buy position waiting. So I always had, once the thing is range bound, I always had a buy and sell position already sitting there waiting. When, Let's scroll back through, hit it again. So that was a nice win. Hit it again. See, we had a market spike, and what happened? The market spiked and then broke through. We got stopped out. Okay, so let's keep scrolling through and let's see how the market turned out. Oops, there it goes. All right, C. Now, do you see this top resistance level on this trend line? Once the market broke above that, look what happens, right? The old resistance now becomes the new support. It never quite came all the way down, but eventually it came all the way down to that support level again and kept riding its way off of that. So there could be trade opportunities off that. Okay, let's scroll through again until we see that the market goes range bound again. You can see that it's going slightly range bound in here. I would have had my sell positions right up in the top of this range, and see how it's kind of like at a pennant pattern. You got a top and a bottom and a top and a bottom. See how it just keeps rolling through? Euro pound is a really cool pair to trade like this. And then sometimes it goes for a month and a half where it's just all over the place. Just be patient on that one. Because once it goes range bound again, all right, because the euro and the pound are in so much correlation with each other and how they move in the marketplace. It used to be even more. Way back in the day, you know, 2006, 2007, 2008, the market on the euro and the pound were really worked in tandem. When the euro went up, the pound went up. When the euro went down, the pound went down. And so the euro-yen was a little trickier trade. At that time, it was hard to get a lot of movement. But now that the correlation is starting to move a little bit, and the euro goes down. It still moves in tandem to some point because they're both very heavily Eurozone driven, and they're both against the US dollar. However, you just got to be patient and wait for that range to hit. This is a great opportunity. We didn't see the top of the range here at the beginning, but it started really hitting the settle point here. Great opportunity to sell, to buy. Had a sell position up here. Eventually kind of squeezed into a little tighter range, and that's where we've been here. I'd have to look at what we just took the other day. I don't know if we took a sell position. Yeah, I believe that when the market shot up, we took a sell position on that trade. So now we closed out a nice profit on that. I've already got a sell position waiting here again, and a buy position waiting down here. Now here's a good thing. This is already a key level low here. It's a market low, and so I've already got a sell position that would be hitting right at the bottom of that trend line. So you have a double whammy on a confirmation to take a trade there. Market would come all the way down. Could be, see, right now market's right in the middle. Okay, this pair does not move 100 pips in a day, rarely. Okay, it can, but it's rare. There's a couple of these candles it has. So you usually have plenty of market timing, plenty of time to get your trade set up. So once the pair is sitting here like it is there, right in the middle of that range, I'm already looking to sell here and to buy, usually a little bit below this line because I would expect price to pull back, and then you can see a nice wick on that candle when the day closes out. All right, is that pretty simple? Let's pull that out again. Let's see what else we got. Let's look at the, I think I said I want to look at that euro pound monthly. It's all good stuff, folks. Very simple, very, very simple. Folks, if you want to focus on simplifying your trading, especially if you're newer to trading, or if you're looking for another strategy that you can add to your arsenal, this is a great way to add a lot of extra trading volume into your account. It's a lot of extra movement. So forget about the Fibonacci I had drawn out here. I just want to talk about the range. So on a monthly chart, now a monthly chart, obviously the higher the time frame, the bigger the stop you're going to have to use, right? Because on a monthly chart, this little swing up above there could be, you know, a couple hundred pips. It could be 100, 150 pips. So you need to make sure that if you're trading this style off of a monthly chart only, that you're using a pretty good stop loss. On like a euro pound, I might use 115, 120 pip stop, but I'm looking for that trade to sit there and run for a few weeks, maybe a week and a half. So let's take a bit. Let's look at these trades. So we're right at this 78.07 level, right, where the market was for quite a while. Months and months and months, all in this range. There are tons of opportunities. If you would set a sell position at any of these spots, I mean a buy position, you would have cleaned house, hundreds and hundreds of pips, all right? So sometimes when the market goes range bound, like in this instance right here, it's a little bit messy on the top. So because the top has been a little bit messy, when it comes to a good support level, I mean resistance level, I probably would have not taken, I'd be a little less open to a sell position, but the buy position was really strong. So once we had seen that months later, we're talking about a couple of years actually, I would have been looking for a buy position right up in here. And sure enough, look at that. That trade moved close to actually right at about 1,000 pips. Okay, it took months to get to that point. So that's more of a position trade. So just make sure that if you're using these longer term trades that you use a hefty enough stop. Let's go to some other pairs. And let's see what I got. Euro New Zealand. Love Euro New Zealand. I like Euro New Zealand cross trades. I like the New Zealand dollar, and I love Euro New Zealand, Pound New Zealand. You can see this on a slower level. I got like 10 minutes left, folks. So I hope this is good information. Try this. Okay, here's what I'm going to do. I'll just stop right here. Anybody who's registered for this webinar, or if you're on this webinar right now, I know Reed's going to be sending me a copy of your email addresses. Give me till tomorrow or so, and I'll put together an email for you guys. I'm going to send you guys a ton of free stuff, including some videos that show you more in depth of how I do this range trading strategy. It is really cool, and it's super simple. Literally, you can spend an hour and a half a week over the weekend setting up trades in advance, preparing your week, and kind of letting these trades sit there as pending orders. Okay, so I'll make sure I'll make sure I put together a really cool email and try to get it out to you by tomorrow or maybe even Saturday. Depends when I can do that, and we'll take it from there. All right, so let's look at Euro New Zealand. Now, we took a trade on this just a few days ago. It did very, very well. So here's what happened. A couple of different times, you can see that even though we are on an upswing on this market, the market is starting to slow down a bit. Okay, the momentum is starting to slow off. So what happened? I would be more apt to a buy position because long term, over the last several months, the market has had more of an upswing. So it's got a higher probability of continuing to potentially push up. However, I did set some sell positions up here, knowing that the market kind of is slowing down and we started going range bound. The market has been range bound to some level between 1,6,400 and 1,6,800. So what I had done is, I think we took a sell position. Did we take a sell or a buy? I can't remember what we did. I had to pull up my charts. I do believe it was a sell position. We took a sell position here. The market shot back down. We took a nice chunk off of that. We took another sell position here. It took a nice chunk off of that. Closed that trade out early, and now I am cautiously watching the market. And here's why: because you can see how this thing is beginning to squeeze up. Here's what will ultimately happen when you trade on a market range that is beginning to work its way slowly in the direction. You will end up being that trade, this 1,600 mark, and boom, spike in one shot. Now, a lot of times it'll reject over a day or two and shoot back right down to the 1,6,400 mark. But when you start seeing this uptick squeezing, 168 still really, really holding, but that momentum is still trying to work its way up. Eventually, it breaks itself up above the surface, and you get a nice run on that. Okay, so usually when I see that, I might take a couple of those sell positions like we did, but right now I'm cautiously watching the market. Like for instance, I might be open-minded. If the market moved down today, down to right around this level here, I might be open to take a sell position 20 pips, 30 pips above that, knowing that if we had a market spike, it would probably spike up and then pull its way back temporarily, just enough for me to close out 50, 100, 120 pips. All right, nice little trade. And let's see here. I want to show you guys the New Zealand dollar, US dollar. I have some other trades I want to show you too. I'm going to show you these real quick. Dollar yen. Now right now I don't see a lot of trade opportunity here that I would want to take trades on. There was a little bit activity in here. You can see how you start hitting a top and a bottom and sort of working its way. There was plenty of good trades here. But right here when the market is this 118.60 mark, and it could be, it's all in a range. When I say ish, it means ish, because we're looking at a daily chart. But you can see how once you had a really good support and resistance level here, especially on the resistance point, once it broke up, it began going range bound here for a little bit. So if you can find that range in here, you can find an opportunity to take some trades in advance and set those trades up. Let's see, I had Aussie Swiss set up. So for a while, by the way, I don't know if anybody caught this trade. This is the Swiss The Swissy tends to do this every once in a while. This is the biggest move I've ever seen the Swissy do that I can remember, but that was one day. That pair moved, what's that, 1,500 pips in one shot. It was crazy. I actually was in a position to where I took a sell position on, I don't know if it's Aussie Swiss, it was a Swiss cross, might have been, I think it was pound Swiss, and I ended up closing out at 750 pips. And then it continued dropping down through the day, so I kind of missed the rest of the trade. But even with this, once the market began to settle, this pair we've done really, really well on, because we knew it was going to continue to try to work its way back up, at least for a while. And it did, and then it worked its way back down. But you can see that once it did that, and the market was still unsure what it was doing, there's a lot of ranges in here. So I could leave a support level here. You can see this, if you would have traded like this, you could have taken buy and sell in one day, like sold position, bought a position, all in one shot, closed out with 70, 80 pips, had a tighter stop, probably a 30, 40, 35, 40 pip stop, until you eventually got stopped out of one trade, right? Once the market is going sideways here, there's a potential, there's not a real lot of movement here, but again, here the market's going sideways, buy, sell, buy, sell, buy, sell, buy, sell, until you eventually break through, okay? If that pair, it looks like it's already moving back into that range again, so it could continue doing that. I'll show you one more, and then we'll wrap it up, folks, and that'll be it. So again, I'm going to make sure that you guys get an email, and I'll give you the email here. Make sure you guys whitelist. If you want to get this, I'm going to send you guys some links to our blog. We've got tons of articles. We've got some videos. I've actually got a how to develop a trading plan where you can download some worksheets to help set up a trading plan. Some really cool stuff for you. So let's look at New Zealand dollar, US dollar. Now I'm going to scroll back here. Spring-ish of 2012. You'll see exactly what I'm talking about. This pair is one of my favorites when it comes to trading the ranges. Now lately, excuse me, it's been since March, April, it's been tricky. We've been on a downtrend for quite a while, and so it's been a little bit less what I call range bound, sideways range bound, okay? But you can see once this sucker gets in a range, it likes to hold it for a little while. So you can at least take many times 3 good trades before you get stopped out. Let's see, where is the 2012? Where are we at? Where's the date? Give me a second. All right. Okay, what date are we on? We're in 2013. I cannot get my data to go back on this. This opened up my time period. We're going to make this the daily 10-year. Just let that data load. All right, let's scroll back over until we find 2012. And you'll see right where I had this mark, because I had this marked really nicely in here. All right. All right, so you can see here, I'm going to tighten this up a little bit. Actually, let's tighten it up right in here. That here it was. All right, so right around this area, the market went range bound. Now, what we saw here, oops, let's zoom back out. Sorry, folks. I'll find it here. Here we go. Gotta zoom back in. All right, where are you at? All right, now I just can't find it again. My gosh. All because I clicked that wrong thing. Let's find it here. There we go. Okay, let's just try to zoom this section in, and we'll stop right there. Okay, there we go. So we can see here that the market kind of went into a sideways chop. Once I started seeing that the market was doing this, I started setting potential visual support and resistance levels, and especially once we hit here and hit here and hit here again, at that point I saw the rejection hitting these wicks. The market was hitting hard and rejecting, so I instantly put a sell position here, buy position here. So we sold. 2 days later we bought, and the price went back up. A couple days later we hit close out in profit here. We sold again, and then we sold again, and then this one we got stopped out. When it moved back into the range, we had to buy here, and we got stopped out again. But then look what happened. It went to another range, and we had sell opportunity and buy opportunity, sell, buy, sell, buy. And some days we sold, the very next day they closed out and we bought. We already set the next position up in a sold, bought. We ended up closing out that month over 2,000 pips. by trading those market ranges over like it was about a 5 or 6 week period or something like that. So that's it, folks. I'm going to get back to my slides here, and I'll give you guys an email address that you guys can basically, oh, I don't want to do that. You want to make sure you put this email address in here. Support, we're going to skip the Q&A because I think the next traders are coming on board. But folks, any questions you've got, send it to my team. We'll be glad to answer any questions you got. We'll send you some videos. We've got all kinds of good stuff. But I'll send you a nice little goodie box in your email inbox, that is. And we'll send you a bunch of good stuff. And I'm actually going to show you, send you a link to a piece of software that helps me trade ranges that works really, really cool. It's actually simplified my time. But just remember this, folks, if you think about this when you're trading, okay? The market trades in a range 80% of the time. If you can just focus on that and think about 80% of the time, if it's range bound, where can I find the tops and bottoms of the ranges? Just look at the charts. And sometimes there's not an opportunity to take a trade, okay? Sometimes it's just you got a lot of market chop on a certain pair. Go to the next one. Because if you keep looking at your charts and digging through, you'll be able to see the market ranges. So folks, that's it. I appreciate your time, and yep, just wait for our email. Give me till tomorrow or Saturday, and we'll get that shot out. Reed, if you want to take that over, I appreciate having us on here, and take it away.